China's industry is crumbling. Bankruptcy everywhere. People cry about hard life. After China's National Day, physical stores are closing down again. China's A-share Chi-Next index sees the largest drop in history. China's economy continues to decline, and all walks of life are in a deep depression. Physical stores are closing down one after another. Amid the wave of unemployment, more and more homeless people are appearing on the streets. A female blogger in Xiamen, Fujian. This is Wanda Golden Street in Huli, Xiamen. The video I shot at the beginning of the year showed that 50 stores had closed down, and now there are 40 stores. This should be the peak season for physical stores, but there are still so many stores closing down on one street. Mr. Li, a citizen of Xiamen, told NTD that the current economic situation is not good, people are not consuming, and physical stores are closing down one after another. Mr. Li, a citizen of Xiamen, the most prosperous Zhongshan Road and Jinshan Road were basically full of empty stores. This store can change 3 owners in a year. After taking over, there was no business for 2 or 3 months, and then they changed owners because they couldn't continue to operate. Mr. Li said that there was no business even during the National Day Golden Week. Mr. Li, a citizen of Xiamen, this is the quietest National Day since I came here more than 20 years ago. I work in the tourism-related industry. In previous years, our business was booming, but this year there is no business. People around me, including those in my living area who used to love traveling, don't travel anymore. Mr. Li revealed that many taxis in Xiamen have also stopped operating, and everyone has bought motorcycles to save costs. Mr. Wang, a shop owner in Dongguan, Guangdong. Now no one has basic consumption. We are operating without profit and struggling every day. It's so sad and anxious. I haven't bought any clothes in the past 2 years. Even the vegetable market doesn't have many people buying vegetables now. The video shows that on the deserted streets of a city, a street vendor had a mental breakdown, stamping his feet and wailing. Mr. Wang, a shop owner in Dongguan, Guangdong. Prices are rising now, including green vegetables, onions, and pork. When you open your eyes every day, you have to think about your rent and where your water and electricity bills are coming from. If you can't hold on, you can only endure it slowly. Going back to your hometown is a dead end. There isn't enough money to grow crops. There are many homeless people on the roadside now. Mr. Zhao, a resident of Shenyang. There are often many young people sleeping on the streets in train stations and squares in many big cities. Many people are so desperate that they have no desire to live. The video shows that in first-tier cities such as Beijing, Shanghai, Guangzhou, and Shenzhen, a large number of young people are stranded in bridge tunnels, parks, and stations. After China's National Day, physical stores are closing down again. First, let's focus on the news from China. China's National Day Golden Week, which used to be a booming business period, is unprecedentedly quiet this year, and all sectors are in a terrible state. After the National Day long holiday, the performance of physical stores has dropped sharply. Many stores can no longer hold on and are facing another wave of closures. Mr. Li, a citizen of Xiamen, revealed that Xiamen is no longer prosperous due to the large-scale withdrawal of foreign capital. And no one wants to buy houses, even if housing prices are halved. He has worked in Xiamen for more than 20 years and has contacts with fellow villagers from all walks of life. The National Day Golden Week, which used to be a booming business period, is unprecedentedly quiet this year. For example, no one goes to the barbershop anymore, and it is much cheaper to get a haircut on the roadside. Mr. Li, a citizen of Xiamen. Many physical stores have closed down, and some have closed one after another along entire streets. The rent for the stores is very high, and we can't afford to keep them open. Plus, there is no business. In the past few years, our fellow villagers gathered several times a month to eat and drink. But now we don't get together even once in half a year. The impact of catering and online stores has little to do with it. The main reason is that everyone has no money, so they reduce consumption. Wages have also fallen, but prices have risen again. Mr. Wang, the owner of a convenience store in Dongguan, said that China's economic downturn and people having no money to spend have led to the closure of a large number of stores. Some stores have changed owners several times a year and still cannot remain open. Going back to their hometowns to farm does not make money, and there are more and more homeless people on the streets. Mr. Wang, the owner of a convenience store in Dongguan, "Sometimes I don't have enough capital to keep the store open, and I can't even make enough money for living expenses. Business is bad, and I feel very depressed and anxious. There are many people who can't pay rent, and stores are closing down. My rent is hundreds of yuan a day, and I want to sell the store, but I can't. I still have children who need to go to school, and tuition is tens of thousands of yuan a year. I haven't bought a piece of clothing in 2 years." Pharmacies and small clinics that used to be popular have also seen a wave of closures. A Guangzhou doctor who goes by the pseudonym Wang Jian said that he went to work in a small clinic after retiring. After the epidemic prevention was relaxed at the end of 2022, there were too many patients to handle. This year, however, it is very quiet, and the clinic's rent is 12,000 yuan a month, which isn't enough to cover the cost. Guangzhou Dr. Wang Jian, pseudonym. China's economy is very bad now. There is no business. Many small stalls have closed. Many clinics have closed. And there are no patients. The boss is losing a lot of money, and I haven't been paid in a year. The vaccine was paid, but those people are greedy for hundreds of billions, and the people are very angry. A Sanya education and training operator using the pseudonym Liu Yong revealed that it is difficult to do business in China, mainly due to the serious corruption of officials. Liu Yong, pseudonym, a Sanya education and training operator. Nowadays, no business can be done at all. The biggest problem in China is that private property is not protected. The boss is a lamb to be slaughtered at any time. If you do business honestly, one person will blackmail you today, and another will blackmail you tomorrow. If they say they will cut off your power and water, they will. You simply cannot run a business in a long-term and stable manner. China's A-share. Chi-Next index sees the largest drop in history. China's 3 major A-share indexes fell across the board on Wednesday, October 9th. Among them, the Chi-Next index dropped by more than 10%, marking a record for the largest single-day decline in history. As of the close on Wednesday, the Shanghai Stock Exchange Index fell by 6.62%. The Shenzhen Component Index dropped by 8.15%, and the Chi-Next Index broke the previous record of an 8.91% single-day decline during the stock market crash in 2015, setting a new record with a drop of 10.59%. According to media statistics, only 294 stocks across the Shanghai, Shenzhen, and Beijing stock exchanges rose, while 5,039 stocks fell, of which 3,162 stocks dropped by more than 9%. In the latest wave of intense leak cutting by the CCP, a large number of young people in mainland China have become the targets of this harvesting. Most of them were born in the 1990s and 2000s and have never experienced the horrors of previous stock market crashes, let alone the CCP's tactics. Many rushed into the stock market with their parents' retirement money, their own marriage savings, and even money intended for starting businesses. Now, who knows how many will lose everything, go bankrupt, or resort to jumping off buildings or into rivers. It's tragic. In fact, when facing a stock market that has not been prosperous for a long time and has seen several severe declines in the past, a sudden, crazy surge is a red flag. At such times, one must be cautious, as it preys on human greed. Many believe they'll pull out after making a small profit. But don't underestimate greed. It will push you to keep delaying your exit, tempting you to add more positions. It's fine, I'll withdraw if it rises again. But by doing so, you may find yourself waiting for the inevitable stock market crash, filled with regret. While the Chinese stock market was in mourning, other countries remained unaffected. The S&P 500 rose 0.1% in early trading that day. nearing the record high set the previous week. The Dow Jones Industrial Average rose by 155 points, or 0.4%. The Nasdaq Composite Index fell slightly by 0.2%. Indexes in other parts of the world remained relatively stable, with Japan and Germany rising by 0.9% and 0.2%, respectively. In the oil market, prices fell further. International benchmark Brent crude oil briefly broke through $81 at the start of the week before falling 2.1% to $75.55. The U.S. benchmark crude oil price dropped 1.8% to $72.23 per barrel. In the bond market, the 10-year Treasury yield rose to 4.04% from 4.01% on Tuesday night. The 2-year Treasury yield rose slightly, from 3.96% to 3.98%. The changes in yields are closely tied to the Fed's interest rate cuts. The total retreat, nearly 60% of Taiwanese businessmen consider leaving China.
The total retreat, nearly 60% of Taiwanese businessmen consider leaving China. In 2024, many companies from Japan, South Korea, Taiwan, the U.S., and Europe are accelerating the process of withdrawing production lines and assets from China. The departure of well-known companies and brands is creating a massive wave, which has been accelerating in the final months of the year. With the release of a series of heavyweight economic policies by the Chinese Communist Party, the A-share market rebounded strongly before the founding anniversary of the People's Republic of China on October 1st. However, the CCP's harsh intervention in the stock market has caused foreign businesses operating in China to feel insecure and at risk. American think tank experts pointed out that 57.4% of Taiwanese companies are considering leaving mainland China. In response, the Epoch Times interviewed 2 Taiwanese businessmen and a cross-strait economic and trade expert to analyze the mental journey of Taiwanese businessmen who had to choose to leave due to labor costs, supply chain disruptions, and changing policies after more than 30 years of reform and opening up in China. Many people have entered the market as the Chinese stock market has risen for several days under the stimulus of a series of measures taken by the Beijing authorities. However, Reuters pointed out that it is too early for foreign capital to return to China because few fund managers expect the Chinese economy to grow vigorously in the short term. But institutional investors, who manage more than $1.5 trillion in client funds, said that the measures taken by the Chinese Communist Party to attract more funds into the stock market and stimulate consumer spending have increased the attractiveness of Chinese companies, which are still undervalued. In September, the Center for Strategic and International Studies, CSIS, a U.S. think tank, published an expert study titled Diversification Rather Than Decoupling. Taiwan's Industry Responds to Geostrategic Risks. The results obtained after visiting 610 Taiwanese companies at the end of 2023 indicated that 57.4% of Taiwanese companies are or are considering leaving mainland China. If your competitors go, you have to go, Liao Jinjiang, a Taiwanese businessman who had run a business in mainland China for more than 20 years and withdrew from China in 2022, told the Epoch Times that in the 1980s, China suddenly opened up and was willing to let you set up factories. When your competitors go, you have to go. Because your competitors go to the mainland, their quotes are lower than yours, so you can't not go. You are completely forced to go. At that time, Taiwan was still in the era of killing Jew and pulling out Mao, the slogan of the anti-bandit and anti-insurgency movement. Zhu refers to Zhu Dai, and Mao refers to Mao Zedong. So how did they suddenly start running away one by one? Liao Jinjiang said that he felt as if there was a force behind him pushing him. Li Mengju, who was once the general manager of a technology company, also said, "The first batch went mainly for cost considerations, and the second batch went because if you don't go, you will lose your competitiveness." Li Mengju, from the electronics industry, said that almost all of Taiwan's previous generations of electronics manufacturers have withdrawn, mainly because U.S. President Trump launched a trade war in 2018. In recent years, due to Xi Jinping's strict suppression of freedom of speech, there was the so-called 709 human rights lawyers' mass arrest incident, and local media in mainland China disclosed that Guangdong province arrested tens of thousands of people in 1 year. So Taiwanese businessmen heard some cases around them, including that some people in the Taiwanese business circle have been cut off, exploited. Li Mengju said, Taiwanese businessmen are basically very sensitive overseas. Once they hear that the news is wrong, they will slowly withdraw.
China's stock market fell sharply on Wednesday, dispelling the optimism of retail investors in recent days. At the same time, the World Bank issued a warning about the outlook for China's economy. So, can the official stimulus policy continue the strong performance of the stock market in the previous round? And what risks are the large number of people who have poured into the stock market facing now? The Chinese government has successively introduced economic stimulus policies, and retail investors have flocked to the stock market. But in the speculative boom, stock market turmoil and uncertainty about policy stimulus may cause retail investors to become leaks again. World Bank lowers China's economic growth forecast. According to Bloomberg, the World Bank warned on October 8th that China's economic growth is expected to slow further in 2025. At the same time, given the changes in global trade and investment flows and the increase in policy uncertainty, China's economic downturn may put additional pressure on economies in East Asia and the Pacific. Although the Chinese government has recently launched a series of stimulus measures in an effort to boost the economy, in the short term, the World Bank said in its semi-annual Economic Outlook report that China's economic growth rate is expected to decline from about 4.8% this year to 4.3% next year. Speculative enthusiasm and market risks coexist. After the National Day holiday, China's A-share market continued its strong performance for 5 consecutive days before the holiday and continued to rise on the first trading day after the holiday. According to the Shanghai Securities News, due to active trading, many brokerages resumed work ahead of schedule to cope with the post-holiday investor entry boom. Foreign institutions such as Citi have also released research reports, optimistic about the prospects of the Chinese stock market. According to the British Broadcasting Corporation, BBC, the U.S. investment bank Goldman Sachs released a research report entitled, "If You Don't Buy Now, When Will You?" 10 Reasons to Buy Chinese Stocks on October 7th. Goldman Sachs believes that since September 24th, the Chinese government's policy response has been different from the past, and investors have generally received the support they expected. In addition, the People's Bank of China has also injected liquidity into the stock market unprecedentedly. Looking back at this round of stock market fluctuations, since September 24th, the Chinese government has announced more than 10 key policies covering monetary easing, fiscal stimulus, real estate market support, and stock market stimulus measures. Goldman Sachs believes that these policies are milestones in scale, breadth, and comprehensiveness, and can be compared with the 4 trillion stimulus plan during Wen Jiabao's period in 2008, the loose policy when Draghi took office as president of the European Central Bank in 2012, and the A-share rescue plan in 2015. Goldman Sachs also believes that there may still be a lot of room for the rise of the Chinese stock market. However, the market's optimistic expectations are not unreserved. Some American bank analysts warned that the buy everything stage of the Chinese stock market may end soon. Market momentum, fiscal support, profit changes, the U.S. election, and future policy trends will all affect the prospects of the Chinese market. At the same time, consumer stocks, real estate stocks, and brokerage stocks may face the risk of profit-taking, while large-cap internet companies and high-yield state-owned enterprises are still relatively stable investment targets. Driven by policy incentives and market enthusiasm, many Chinese stock investors even sold their cars and houses to heavily invest in A-shares. So, does this leveraged strategy truly reflect investors' confidence in the Chinese stock market? Our station recently launched an opinion collection activity on the status of the Chinese stock market through the international social media platform X. Some netizens said, "Those who rushed in after the holiday have been buried. This time it is definitely not cutting leeks. Please rest assured, this time it is digging leeks' roots." Another netizen joked, "Leeks need to be pulled up and helped to grow so that it is pleasant to cut." In addition, some more cautious investors are wary of the excessive optimism of the Chinese stock market. Mr. Zhao, a Shanghai stock investor who requested anonymity for security reasons, said that in the new round of the A-share market, we must pay attention to risks and strictly control positions. This is like snatching food from the tiger's mouth. It's really not easy to snatch money from the country. This surge is almost crazy. I think the country's economic policies are very good, but I don't know how it will end this time. No one knows whether the economy is so weak and whether the medicine will be too strong. He said, "For me, of course I hope it will rise, because the stocks I invested in before have not recovered. But I am a little worried, especially the day after the holiday. Everyone thinks it may fall. But the country definitely hopes for a slow bull market, and I don't know how strong it will be." Mr. Zhao said that he would not easily take advantage of this wave of the market to continue to increase his position because he had not recovered his losses before. The wave of share reduction exacerbates market uncertainty risks. According to a report by China Business News, while retail investors responded to the financial sector's encouragement to enter the market, more than 100 listed companies in China have issued share reduction announcements or disclosed relevant share reduction plans in the past 2 weeks, and major shareholders are quickly cashing out through centralized bidding and agreement transfers. Undoubtedly, this reduction behavior has exacerbated the market's uncertainty risks and made some investors more worried about the future trend of the market. Stock investment manager Zheng Shuguang said in an interview with this station that the current A-share turning point has not yet appeared. "We can't say that the rise from September 24th to now has reached its peak and will end in October. This is a very low probability event. Even a bull market driven purely by funds will last for a period of time. For large funds, if it is driven purely by funds, they are not interested. They must see new policies introduced in fiscal policy and improvements in the business environment before they invest, because this is long-term." He said, "For speculators, it is a once-in-a-lifetime speculative opportunity, but ordinary retail investors should still be cautious." Zheng Shuguang also pointed out that large-scale investment institutions that are still on the sidelines have not yet entered the market, so the future trend of A-shares still needs to be observed. He reminded retail investors that policy stimulus may drive a short-term market rebound, but the long-term market situation remains to be seen, and blindly adding positions may bring greater risks of losses. Another former Shanghai private entrepreneur, Mr. Qian, who requested anonymity for security reasons, told our reporter that he hoped his wife's stocks, which had been trapped for many years, could be sold during this wave of market conditions. Mr. Qian mentioned that one of his relatives has been involved in stock market trading since 2015. Despite being stuck many times, he is still unwilling to sell at a loss and still believes that the national team rescue will not end easily. He said, "A blind man enters a casino and can only hear some noisy sounds with his weak hearing. Can he make money? He doesn't understand the essence of A-shares. There are only leaks and leaks. The leaks are just a paradise for self-entertainment under the supervision of gardeners. It's hard for those elderly people who have worked hard for their life savings. The game is over." In response to the current fluctuations in the Chinese stock market, Mr. Qian sighed. this time the stock market will definitely end with another round of retail investors being trapped. There is no doubt about this. After studying economics for many years, this is common sense. The big investors get out, the big shareholders get out, the country gets out, the local governments get out, the financial institutions get out. Then who will be the only ones trapped? This is self-evident. What the Chinese lack is memory, and what they have is greed, and they yearn to get rich overnight. Also, for security reasons, Mr. Sun, a former foreign company executive in Shenzhen who wished to remain anonymous, told this station that his wife had been trapped in the stock market for many years but had been freed due to this wave of rising prices. His view is, it is better to rise than to fall, but a surge cannot last. I also reminded her to leave the market in time, and the best way is to lock in profits. CCP's continuous economic rescue moves, worse to come soon. The top leaders of the Chinese Communist Party have successively announced a so-called economic rescue plan, and the Politburo held an economic meeting in September, which is an unusual occurrence. However, some analysts say that while the Chinese economy may respond quickly, China is not far from becoming another Zimbabwe. In addition to the central bank's announcement of interest rate cuts, reductions in the reserve requirement ratio, and printing money to boost the stock market, the Chinese Communist Party also announced plans to distribute red envelopes to low-income individuals. On the 26th, Reuters revealed that the Ministry of Finance of the Chinese Communist Party will issue bonds worth 2 trillion yuan, part of which will be used to subsidize old-for-new exchanges. Another portion will be allocated to families with 2 or more children, providing 800 yuan per child per month, as well as assisting local governments with debt relief. The Chinese Communist Party also plans to gradually increase financial support for small and medium-sized enterprises. In short, the Chinese Communist Party is attempting to plug various holes in the economy simultaneously. The reason for this is quite clear. At the Politburo's economic meeting on September 26th, party leader Xi Jinping unusually admitted that new situations and problems have emerged in China's economy. The self-media outlet Financial Truth commented on social media that the CCP violated normal procedures by holding an economic meeting in September for the first time, and by giving direct financial aid to the poor for the first time. This shows that the Chinese economy has reached an extremely dangerous point. At the very least, those in Beijing feel that the safety of the nation is at risk. The collapse of the Chinese economy has opened the possibility for social unrest, which could shake the CCP's rule. On the 26th, Li Chengpeng wrote that Chinese people once knelt to the government in groups, then jumped off buildings and bridges in groups, and now it has become common to kill officials. This reflects a transition from belief in a better future to despair, where one life is exchanged for another, a symbol of the times. Li Chengpeng compared it to the tragic Jiangnan slave rebellion in the late Ming dynasty, when servants in Jiangnan, the richest region, suddenly rose up and killed the wealthy and powerful. Notable figures like Dong Qichang, Xu Xiake, and Gu Yanwu all suffered as a result, and soon after, Emperor Chongzhen hanged himself at Coal Hill. Regarding Beijing's economic rescue efforts, Li Chengpeng remarked that only a normal economic system has an economic cycle, and prescribing the right remedy is what constitutes a real rescue plan. Now, experts say that solving China's economic problems is like a medicine vendor saying, you catch a flea, pry open its mouth, administer the medicine, and the disease will be cured. News Investigation commented that the main strategy of these economic rescue policies is to print money. First, the central bank announced that it would print money to save the stock market. The Politburo then held a meeting, encouraging the financial sector to spend more on infrastructure, ensure the delivery of housing projects, and support bankrupt real estate companies. If money runs out, the central bank will print more. This essentially reverts the central bank and the finance department, which were separated in 1994, to the model where the government can print money at will. This is alarming. It's like they're preparing to set off a grand firework at the end, turning China into another Zimbabwe. News Investigation predicted that within a year, hyperinflation will hit, and another large economic cycle will begin. I feel sad for the people at the bottom, but there's no other option. Those who can leave the country will do so urgently, stockpiling US dollars, gold, and food to prepare for the coldest and longest winter. New situation in China's economy. The Politburo holds rare, meeting as Xi Jinping acknowledges challenges. The meeting was chaired by Xi Jinping, leader of the Communist Party of China. During the meeting, it was acknowledged that new situations and new problems have emerged in China's economy, and the call was made to face difficulties and strengthen confidence. Some economists noted that the phrase, new situations and new problems, indicates that time is pressing, and the tasks ahead are formidable. The Politburo of the Communist Party of China, composed of 24 members, is considered the second most powerful body within the party. The meeting recognized that challenges have arisen in China's economy, stressing the need to face difficulties and strengthen confidence, and to work hard to complete the annual economic and social development goals and tasks. In addition to pledging to meet the year's economic targets, the meeting also vowed to prevent further declines in the real estate market. Bloomberg reported that this seems to be the strongest commitment yet to halt the real estate market's free fall and attempt to stabilize prices. The briefing of the meeting, as published by the Communist Party's official media, stated that efforts must be made to stop the decline in the real estate market and stimulate a stable recovery, while also calling for measures to address the concerns of the public. The second highest authority in the Communist Party emphasized that the government would strictly control the addition of new housing projects and focus on completing unfinished ones as part of an effort to ease the housing oversupply. Bruce Pang, chief economist for Greater China at JLL, remarked, "The stimulus plan approved by the Politburo today represents a strategic shift in macroeconomic policy, moving from scattered policies to a more balanced and coordinated plan." He added that the mention of new situations and problems shows that time is tight and the task is arduous. It is noteworthy that the Politburo typically discusses the current economic situation during meetings held in April, July, and December. According to official documents, the last time such a meeting occurred outside these months was in March 2020, when China was dealing with the coronavirus pandemic. Over the past 4 years, September meetings have primarily focused on internal party discipline or organizational matters. Therefore, media outlets have found it unexpected and rare for the Politburo to convene in September to discuss economic issues.
The fate of China's stock market is sealed. There is no escape. Who will take the blame? Xi Jinping, the leader of the Communist Party of China, is willing to make a 180-degree U-turn on policies to stimulate the stock market. However, this surge lasted less than 2 days. Over the past 2 weeks, A-shares have absorbed 2 to 3 trillion yuan of people's hard-earned money. On October 11th, major banks that had previously been silent on loans for stock trading suddenly shifted their stance. Over 20 banks issued emergency declarations stating that credit funds are strictly prohibited from flowing into the stock market. Domestic netizens commented that banks know once money enters the stock market, it cannot be withdrawn. At a time when Xi Jinping is desperately trying to boost the stock market, the banking industry has abruptly stopped. Rumors suggest 2 things. First, that the stock market situation is dire, and second, that CCP officials are not taking Xi seriously. In any case, Xi is already seen as a bad emperor. It appears the public's support has waned, and many are waiting for his downfall. Market conditions over the past 2 weeks have wiped out 3 trillion yuan of people's savings. Professional investor Bales wrote that the end of this so-called bull market is certain. It will undoubtedly end in chaos. though he is unsure who will take the blame. The market's collapse was triggered by the central bank, and in the end, it may be a group from the central bank that gets purged and scapegoated. Despite this, authorities are still trying to stimulate the market. The Ministry of Finance is scheduled to hold a press conference on Saturday, where they are expected to announce further large-scale fiscal stimulus measures. Asia Finance holds little hope for these measures, arguing that what is truly needed are political reforms. Without meaningful structural reforms, not only will the stock market continue to fall, but China's real economy will be carved up by emerging markets like India and Vietnam. Asia Finance also pointed out that when China's stock market bubble bursts, large investors with insider information typically benefit, while the vast majority of small investors suffer losses. For instance, during the 2015 stock market crash, the rich and powerful pocketed 250 billion yuan from the poor. This tragedy may repeat now. If the poor finally wake up, A shares may struggle to stay above 1,000 points. Some analysts believe that the CCP's policies aim to destroy people's savings. A self-media article revealed a harsh truth. Having too many deposits is not favorable to those in power. Current policies are designed to deplete people's savings. Excessive deposits mean that money is idling in the financial system, which hampers economic circulation. The government's solution is to issue more currency and encourage spending. Their top priority is to get people to withdraw their savings. However, after learning from recent years, people are cautious, neither investing nor spending, but saving. To counter this, authorities have made a bold move in the stock market, using experts and self-media to create momentum, persuading some to invest their savings in stocks. On the last trading day before the holiday, the 3 trillion yuan trading volume was drawn from investors' deposits. Yet, both deposits and loans have limits. After a sharp rise, a sharp fall follows. Stock traders often find it hard to stop during a rising market. When caught in the excitement, they may be wiped out by a sudden crash. Those who use savings or even take out loans to speculate in stocks risk not only losing their life savings, but also falling into deep debt. The article concludes that starting a bull market is a way to eliminate deposits. This bull market will result in another major transfer of wealth from the majority to a small elite, from the poor to the rich. Instead of thinking about making big profits in the stock market, one should focus on protecting their savings from being wiped out. Observers are concerned that in the context of economic downturn and soaring unemployment, Chinese society is already prone to instability. Now, with the government taking risks, there is a possibility of economic collapse this year, which may lead to public rebellion, social revolution, or alternatively, in response to this looming crisis, Xi Jinping may tighten control, shift to a planned economy, and North Korea eyes China. New stockholders bitterly complained about their losses, and the artificial bull market was criticized for harming both the country and its people. After the mainland's National Day holiday, the stock market, which had been soaring prior to the break and was even promoted as a bull market, saw thousands of stocks plummet sharply in the first 2 days after the holiday. Many new stockholders were trapped, losing their entire savings. They voiced their frustration online, lamenting that their years of savings had been wiped out in just 2 days. They were devastated, with no tears left to cry. People angrily condemned the artificial bull market as a disaster for the country and the people, labeling it a fraud and an ugly money grab. After the long holiday in China, on October 9th and 11th, the 3 major indexes in the mainland fell collectively. On the 11th, the Shanghai Composite Index dropped 2.55%, falling below 3,300 points. The Shenzhen Component Index dropped nearly 4%, and the Chi-Next Index fell by 5%. According to Sina Finance, the 3 major indexes of the mainland stock market opened lower and continued to decline, with over 4,800 stocks falling. On October 10th, the 3 indexes diverged but barely managed to hold at 3,300 points after a period of volatility. Earlier, on September 24th, Chinese authorities unexpectedly introduced stimulus measures for the stock and housing markets, which were endorsed by the Politburo of the Communist Party of China. The mainland stock market surged, and occasional bull market propaganda appeared. Mainland media estimated that 3 million new stock investors opened accounts to enter the market. At the same time, however, the main funds in the Shanghai and Shenzhen stock markets fled, with a net outflow of 169.8 billion yuan on the 8th. Many retail investors and new account holders found themselves trapped, and numerous individuals shared their suffering on mainland social media, warning others not to be deceived again. New stock investors voiced complaints and frustrations. Shanghai blogger Wu Shuobiao shared on October 9th that it was his first time speculating in stocks, and he had gone all in. Yesterday, I followed the advice of an economic blogger named Da Lan, but today I became a leak, referring to a naive investor. I lost all the money I earned from 3 years of financial management with Richard. Slumping in his chair, he sighed. Earning money beyond one's understanding is truly difficult. On October 11th, workplace blogger 5 Billion Min Ge remarked that the most unfortunate group of people this year had emerged. He said, "I was laid off after Chinese New Year, opened a restaurant with a loan, but it went bankrupt within 6 months. I spent thousands of dollars on self-media courses, but my followers are still in the double digits. Right before National Day, I mortgaged my house and car to raise hundreds of thousands of yuan and entered the market at 3,700 points. Now I'm really just a leak." Blogger Aji Gay also commented on October 11th, "It's terrible. I lost 35% in just 4 days after opening my account. On the first day, the 8th, I lost 12%. Now I've lost 35% in 4 days. Who on earth keeps shouting that stocks are like free money?" Henan blogger Brother Hui Xiaomidi shared on October 10th that he lost 800,000 won in 2 days and fainted on the spot, with no hope of recovering his losses. Mr. Zhang, a hairdresser in Xi'an, revealed that many of his friends with no investment experience had been discussing A-shares. Even the assistants in our store were actively discussing the startup sector and more. A close friend of mine, whom I've known for over 10 years, had finally saved up 3 million yuan over more than a decade. In one night, that 3 million was wiped out, and now he's in debt by hundreds of thousands. His wife is divorcing him, and his business is also on the verge of bankruptcy. He lamented, "It's truly tragic to make money but not be able to keep it." Blogger Low Power Life shared that he is a very frugal person who can't even bear to eat instant noodles, has never bought a 2 yuan lottery ticket, and keeps his living expenses below 1,000 yuan a month. However, he lost 10 years' worth of living expenses in just 2 days of stock trading. He recounted his mental journey of being deceived into the stock market, hoping to warn others who are considering entering.